Traders, what's going on? Jamie Saettele. It is Thursday, uh, December 15th, and holy moly, we have witnessed a dollar barrage. I guess you could call it a dollar parabolic move, call it a number of things. Um, hey, Eileen, what's going on? How are you? How's everyone? Hey, make sure that you can see the screen. I'm going to go over a couple of new things today, actually. Make sure you can see the screen. Make sure you can hear me. Just let me know real quickly. Ken Wall, how are you, my friend? We are going to get into the metals today. Conwall, we've got, I know you always like to see silver and crude. Silver is super interesting. Okay, so before I go into specific ideas. Well, if you read the swing update last night, you know that, look, I mean, there will be a time when, and it's probably sooner than later, when we get like a massive mean reversion in dollar yen and yen crosses especially. But for the moment here, it's kind of stupid, I guess you would say, to try and fight this. Eileen saying any new support for euro dollar. So that's actually something that I'm going to go through. So the chart we put up, or I put up yesterday, this was, we had the head and shoulders continuation pattern, right? And unfortunately, the trigger, I had an entry at 105.57, which was the high volume level from yesterday, and it wasn't hit. But there are actually some levels to watch on the downside, even before you get to the target area, which is where we put 102.50. So everyone may be familiar, if you're not familiar, with John Templeton, right? Templeton Funds. Well, he was a successful market speculator, if you will, back in the day. And he had a saying that one of his 22 tenets of investing was that price moves in the square root or that markets move in increments of square roots, okay, of the price. So what that means is simply you take the square root of the price. So if we were to take, for example, if I took the euro right now is trading 103.79, right? So let's just say 103.80. So if I took 103.80 and I put a square root on that, and I'd get 101.8 pips, 102 pips basically. All right. So you know that I am a big fan of using the year open and month opens and things like that for reference points, right? So year open is always on my chart is in magenta. And obviously that was big level just last Thursday. Well, I thought it'd be interesting. I know that people that use square roots from highs and lows, but I thought it'd be interesting to plot square roots from the opening price. So what I've done, and I've been working with this for a little while, and I'm comfortable enough to share it, is take the square root of the year open, in this case 108.72, and then you plot the progressions for each one of those, so square root progression +1, +2, +3, +4, +5, -1, 2, 3, 4, 5. Okay. So if we look at it that way, you can see starting just this year, right here, we had the square root progression that was the high was the 7th. Okay, every 5th one's in red. So 5, 6, 7. with that said, and going through a lot of charts, I've noticed if you go 7 square root progressions to the upside and then you break down, you look for 7 to the downside. So that would put us at 101.42. All right. Now 102.50 would still be the target I'd be looking for this head and shoulders continuation pattern. And the 5th square root progression is actually 103.50, which actually was almost just hit. So you kind of go in increments, you can see, of the square root. So in this case, you would get down to, let's go down here to, let's see, we'll just go to 1. Obviously, intersections are always best. So some point next week, 102.50 would intersect this really steep trend line, right? And the square root progression at 104.54, okay, that's actually level to watch for resistance at this point. Got it? So 104.54. So this all fits within the idea of the head and shoulders continuation pattern, and the target on that again is 102, near 102.50. Again, to take that target, I just measure like this. I'm not measuring up in the spike because, well, you know my feelings on that. But 102.38 is the target, pretty close to 102.50, right? So that would be where I would be looking for Euro, 102.50, and ultimately you could have a really big low at 101. Near 101.42, based on the square root progression idea. Okay, so let's continue with this method, idea, whatever you want to call it, right? So pound dollar, the thing with pound dollar is it's gone through so many of its square root progressions, right? It actually, I only have them calculated up to 20. But cable is doing one of the, we had a nice trade in cable, 27 short down to 25.30. Unfortunately, we're not still short, but there may be an opportunity to get back on the short side. So 2 things to follow here. We got, again, you know how this works, right? The old corrective channel action, and would be looking for basically resistance back at 125, okay, which is the underside of the corrective channel. So that's just that in cable, and this would offer a pretty good reward to risk, because you could go back to 125 for resistance and then put stop above 25.67, which is today's high. Okay, so give it a 25.80 stop or something up to say 125, and then would be targeting probably about 123, which is again the next square root level, but that square root level's got some pretty good juice on it. You can see you have, what do we got here, pound dollar? It was the lows back here, right, 11.18. And then, pretty close to the highs back in October 18th and 19th. So would be looking at shorting 125, which is also the month open in cable, taking it down to 123 or so. Stop above here. So there is a good idea, good setup in cable. Again, that's 100 pips higher, right? So it's kind of tempted to like try to trade it on the long side from here, but I gotta tell you, I'm just so like with the dollar, and it's relentless, and this thing is punishing, and it is very difficult to try to get in the way of this thing. We've got to be close to some sort of a sentiment extreme, and therefore a snapback that lasts, a very sharp snapback in the dollar. But I'm not trying to call it here on a Thursday. Again, maybe a Friday high, something like that. Maybe Monday, a new week. I don't know. But we'll get into that when it seems right. But 125 does look like a good short for cable. Again, that's just the corrective channel setup, looking for the move back into the corrective former support, new resistance. Okay, what about Aussie? We talked about Aussie yesterday, looking for the ABC down, right, from the highs back in April. So that puts us basically on a target looking down towards 70.90. 70.88 would be exactly two legs down. And this little flag formation here, kind of accentuates, or if you will, the importance of that target at 70.90, because the 200% range expansion, right? If you just expand the range here of the flag, which is often a way to get a target from a flag, you get 70.97. Okay, so there we have, a great looking target area in Aussie dollar. Right now, near term, we had the entry up at the week open last night. It missed by about 10 ticks, but if I'm looking at this now, let's look at this from the square root perspective. If I'm looking at this now, 73.66 is one of them. I think 73.80, the month open, might be better. Look, you could still get up into 74.50, which is the underside of the former line here. It's hard to, I guess, see a rally in anything against the dollar over the next day or so of that magnitude. But let's look at the square root progressions in Aussie dollar throughout the year. Okay, so early in the year, the big dump off, right? 1, 2, 3, 4, 5. We bottomed at the fifth square root level. All right, and then we actually, the top, this is kind of the opposite of what the euro's doing right now, because we had the euro, right, went to a +7, and now we're going to maybe a -7, which would be 101.50. Well, we went -5 on Aussie to 68.55, a little bit below that. We actually went +5, was the first pullback. We ended up going even above +6 before dumping off. And then we had our target on a long at 75.44, which was very close to a square root level of 75.37. Didn't get hit, of course. After yesterday, everything changed very quickly. But the point here is stay on course with this flag, and the Aussie dollar exchange rate does appear vulnerable from here, at least down to 71 and change, or 71. So there's still 250 pips or so of downside on Aussie dollar, and we'll be looking at maybe trying an entry now into 73.80 potentially instead of 74.40, as was the case yesterday. Okay, Kiwi dollar. This is one that will also have an entry on the short side, 70.79, which is the month open, and a square root level, 70.75. Here you can see Kiwi 72.40. We did have marked as resistance. The high yesterday was 72.39. Again, you've got the head and shoulders here, a little flag, if you will, corrective action, and Kiwi looks like it's about to go night-night for quite a while. The target on this head and shoulders pattern would be down near 64.20, believe it or not. So pretty far down there. I would be looking for probably support at the trend line first, though. And we'll just move to a different chart so you can see that a little bit better. Okay, so one currency that really likes its square root progressions does seem to be Kiwi. You can see the top right here, back in September, was right on number 8, 5, 6, 7, 8. Okay, the secondary top was right on number 7. 5, 6, 7. And then yesterday's top was 1 tick away from the 5th. So if we look down here and say which progression levels look important, I would say 67.45 does, and so does 66.60. So that would be an area to look towards in Kiwi. And then if, we want to leave an entry up at 70, 75, 70, 70, 79, okay, which is the month open area for Kiwi. So that's an area that I want to be short into. We'd want it stops probably just above 71, 65 or so up here. And see if you can take it all the way down to the 66, 60, 67, 50 area. Trend line looks like it'd actually be about, a little bit between that over the course of the rest of the year, which is really almost over. So Kiwi does look nice on the short side. And look, I mean, bigger picture, it could certainly be the bigger, potential break, if you will, for Kiwi. If we look at, oops, that's Kiwi yen. If we look at Kiwi dollar on the long-term chart, right, we do have the big double top up here, this wedge, which is clearly broken at this point, okay, after the market really screwed around with it for a while. And, that this would actually portend a much larger move down, towards the mid 50s at some point. So who knows, maybe Kiwi short is a trade of 2017, or the trade of 2017. Move on to dollar yen. Actually, we'll go to dollar CAD because we're looking at commodity currency. So I tweeted to watch out for the 33.90 area because of this. So we have traded into, we actually traded up to 34.17, so a wee bit higher. Month open 34.30. This is going to go hand in hand with crude at this point. Look, dollar CAD is the move higher. We look for that trend line support, and we got the trend line support, but really no resistance, okay? And I would not call this a corrective rally in dollar CAD. Actually, at this point, you could go A, B, C, believe it or not. So dollar CAD might actually be one where, God forbid, you might actually be able to fight the dollar a little bit. We are at a big spot with the fib and with the month open, obviously almost getting hit today at 34.30. So that would be one to look at. But again, I think it's better to even look at it on the crosses, right? As far as, looking at, say, Euro CAD. Which is one that we've looked at a good deal here. So Euro CAD, do we still get 140.40? Don't know. It's been kind of a mess, right? So Euro CAD is one that I still think has massive downside potential. If we look at that daily chart, you can see it. Been posting this a little bit on the hold on the swing updates. All right. So the 618 of the entire move back to 2012 low actually comes in at 36.47. And you got a trend line down near there too. So you could end up down, at least 300 pips lower over the next week or two. And eventually you could be a lot lower than that because you do have two equal legs from the top, would put you at 30.35, which intersects the low back in April of 2015. And really, this is a head and shoulders pattern, this whole thing. Okay, left shoulder, head, right shoulder. So, just looking for the right entry. See how it closes today. If we're, going to do 3 waves up, we get one more push and then, bombs away. Otherwise, if we finish, down here today at new closing lows, it's probably worth just putting in an entry. So that's something that we'll be looking at, or I'll be looking at after the close. Okay. And that is Euro CAD. You're starting to see yen crosses as I'm speaking, starting to come off a little bit. Hold on. A lot of them have made, if they finish like this, they'll have key reversals on them on the day. I do think that's the next kind of idea or move, if you will, would be, to get some yen cross shorts in there again. As I said yesterday in the notes in the watch list, all I wrote was this is insane as far as dollar yen's concerned. So let's go to that. Let's look at dollar yen, and then let's look at the other yen crosses. All right, so yen crosses, get rid of this for now. So we're getting close to the trend line, up about 119, upper parallels even above there. If we finish closing basis under 118.05, sure, there's a possibility that you've actually got some sort of a peak in place already for a move back to, at least I'd say 116.40, right? And that was the new 116.20 or so, 116.20, 116.30. That's the old 75 line, which was resistance actually. I guess it was on Monday, it was resistance, right? So we thought we had a top in it there, and we were looking towards at least the median line. The Fed came in obviously and did what they did. The market took it as, rates going to the moon, and the rest is history for 2 days at least. So yeah, if you're going to get, as I wrote yesterday, if you're going to get a top, there's several levels to watch. 118.05 is one, 119 trend line, and then 120.20, which is the year opening price. Okay. And speaking of the year opening price, we actually have come into the year opening price on several. Hold on for a second here. All right, sorry. Okay, we actually have come into the opening price here on a number of currencies, Aussie yen being one of them. And if we go to Aussie yen, Aussie yen, last night, year open to the tick. We hit that. Okay. CAD yen went through its year open and just took out the high from April 2016. So it actually made a new high for the year. All right. Kiwi yen is putting in a pretty big reversal day. It could get an outside day status, and the trend line that extends off of the highs from December 2014 and April 2015 is just above price, as are really major inflection points. Okay, so you've got the low from October 2014, the low from February 2015, the high from December 2015, so last year, and we just come into that region. So we've got some major levels here in Kiwi yen. And then of course, well, Euro yen's one, which is making itself a, also making quite the reversal day. As far as horizontal levels on this one, I actually haven't looked a ton at it because I've been more focused on pound yen. But I mean, you did have the high here, okay? The May high. But let's look at pound yen because that's really been, right? That's been the big one that I've looked at a lot over the last few days here. Okay, so you know this chart. This was in the 2 days ago, right? And we are making reversal today, so that might have been it. I put up on Twitter this morning. This is a monthly chart. The 2000 low is 148.20. If you zoom in on that, you can see 148 area was really big on the way up. Okay, so even though this was a massive bull trend, you did have a dip, if you will, from 148 to 138. Okay, and then it was support. So if we were to get that thing here, 148 and 138 is actually the area that I'd be looking at as support, right? This is the old channel, as you know. And then, of course, we have the 7-8 weeks consecutive up thing going on here. So consecutive ups, right? 7, pullback, 7, good top, 8, good top, 7, good top. And then the high up in 2015 last summer, actually, or 2 summers ago, I guess, summer 2015 actually went to 11. And so depending on how we close tomorrow, we could be 8 or we could have been 7. So pound yen is one that is certainly right there as far as wanting to short. You also could do it by looking to short pound dollar into 125, which is the clean setup, and then looking to basically short dollar yen as well, right? When it gets its own setup, which there really is none at this point. Again, I'd want to see either exhaustion into the trend line at this point or the market to close well under 118, and then for 118 to be resistance tomorrow or something. So yeah, there are a number of yen crosses that look just ripe for reversals and are maybe starting to do that today. All right, let's look at real quick the square root levels of the year open on dollar yen. You can see some of these play out really well. The low we have, so 5, 10, 15, 19th square root level was the low back on Brexit. The levels that I mentioned, actually 118.05, it lines up with the square root level here, okay, which would be the second square root level down from the year open. 119.11 lines up with the trend line, and that's the next one. That's this first square root level down from the trend line. And then, of course, the year open, it's 120.20. All right. So on the way down, you'd probably be looking for your first, level. Let's just say, for argument's sake, that we put in a top at 119.11 tomorrow or something. All right, because it's the trend line, it's a big spot. You'd be looking 3, square roots down as the first level. So 115.82 would be kind of the first area to target as a first reversal area. And that's kind of a general rule as far as with this thing is looking at, you want to see 3 square root levels, taken out. It's almost, if you're familiar with point and figure charting, it's kind of similar to that, right? You have like a 3-box reversal where point and figure, you're plotting every, X amount of pips or X% movements. And I actually have a point and figure chart over here. So this is a point and figure chart, and it's plotting, so this is a 110 pip box, with a 3-box reversal. So meaning that every 110 pips, it plots dollar yen, a new X. And the only way to reverse it is if you go down 3, when that means that you've paused. Okay. So, or that would be, you know, your potential kind of support area. You can see we've had 16 in a row. You did have 23 back in 2012, 2013. Historically, 16 is pretty stretched. 18 in 1995, 16, 14, 17. You know, so we're in the right area. Okay, let's move on and check out. I know that we've got some folks in here like Conwall, who I know wants to look at silver and wants to look at crude. And so we will look at those. Eileen I have another question. Volume. If it starts to get low volume at times of day, how does the impact entry or exit decision around price action? So I think I understand what you're saying. It really doesn't for me. You know, Eileen, I really don't, you know, I'm not going to, you know, if it's not going to matter for us, put it that way, right? Like you're not going to have a problem of getting out of a position, you know, because, you know, the volume is so or whatever, right? That would be something like for an institution that they would think about. You know, Fridays are typically the most active days actually anyway. So I wouldn't worry about that if you're going into tomorrow. You know, if we look at the volume levels though, like Euro, I mean, the volume level from ECB was and we had that marked down, that 106.67 is a big level, and it still is. So, you know, that's why any sort of rebound you get, I would be looking to sell it with stops above here still. Remember the entry yesterday was when it was this level yesterday, right? And we just never, unfortunately, we never got it because we opened up down here and we never were able to get that entry triggered. Yes, Eileen, so a high level with a high volume level might have more weight. Yes, exactly. The high volume levels are, you know, those are levels that I pay great attention to, right? So the high volume level for yesterday in yen, for example, is right here, okay? And we can look at that on the 60-minute chart and say, we can say where it is. We can say the high volume level for yen it's right here. Is right here. It's 116.35. It actually, believe it or not, lines up with that old 75 line. So this is actually a level you'd look at for support at this point, at 116.35. Okay. You know, so when you get an intersection of levels, right, of slope and a volume, or even maybe you have a fib there, maybe you have a square root level there, whatever. Okay, so that's a big spot. Now, 1635 is a long ways from home, right? We're at 1810. I think that we're going to get a short opportunity. 119 would be a great place to do it. I don't think we just topped, you know, because it's a Thursday. Friday highs are a lot more common, you know, for these trending moves. You get the Friday high, and then the market will go, you know, exhaust and then tumble or reverse or whatever. So 119 might be the area to really try it or take a shot. But then the area I'd be looking back towards would probably be that 1635 area. All right, let's move on. What was that? I was going to get into the other markets like silver and gold. And gold's a biggie right now. So let's start with gold. This is silver, but let's start with. Okay, well, guess what? We just hit this level. So This is the median line all the way back to 2011, 2012. And this is also a bullish slope, which, I have it grayed because I don't know if it's so-called working or not. You've seen touches on it. It doesn't really mean anything. You still have to hold. So we have seen gold go down $200 an ounce since the post-election spike. That's a big move, clearly. And this is now, this is huge. I can't really say anything else. This is big. Back in, you have support here, but if you go through it, you can see that you're really kind of at risk of a total crash. Like a full-on crash. That's what's happened when we've gone through it, right? Even on the upside, you go through it, consolidated around it, and then we went into a big move higher. So, yeah, this is a huge area. This is a very high reward, low risk area to get bullish on gold, which essentially also means to get bullish on yen, which would be bearish dollar yen, bearish yen crosses. So we are seeing all that in the other charts as well, which is, which at least kind of fits, the puzzle, if you will. Let's take a look at silver. Ken Wall loves silver. My man right here loves it. Let's take a look at silver. Silver, this was the same chart we've looked at for a while, and we continued to press that resistance line. This line right here still acted as resistance, did it not? Did. Until yesterday, and then here we go, silver. 16.9 right down to, we were looking for support at 15.8. Okay, so if we are going to go higher at all in silver, 15.8 is the level right here, 15.8. Okay, that's the low from May, and you've got some slope going on here as well. Okay, from kind of a strangely drawn, I would say, because it's off a spike, but off a strangely drawn slope line, and then you have the downward sloping channel here as well. And this is again log scale, looking at silver. You want to look at log scale. Same goes for crude. Crude needs to find a floor above this 49.60, in my opinion, in order to be a positive on it. Conwall was asking, kindly give me a longer term bias for crude as well as silver. Yeah, so okay, well, we just went through silver, right? And basically the support is right below here. Okay, we were, silver was just really a dime or so lower. I think that crude is going to have a big move up. Okay, from a tactical standpoint, a trading standpoint, I need to see 49.60 hold. Okay, because if 49.60 doesn't hold, to me the risk is that you end up getting a bigger washout to the downside, and maybe actually getting end up getting a move down towards this parallel and down toward it here, which would be about 46 and change. Okay, and you can see here, excuse me, hold on. Okay, sorry. So that's kind of the key. It's kind of a conditional statement. Okay, we need to have the market hold up here at 49.60. If it does, then great, and we can be on our merry way. If it doesn't, then watch out. Crude could be headed back to $46. So 49.60 is key. We don't hold that, 46 bucks. Okay. If we take a look here too at the COT levels, right? And this is something that I put in the post. I believe it was yesterday. This is nuts. So you have seen this is the 1 week change in total positioning. Okay, so that means net speculators and net hedgers. I'm taking the combination. So if we go to crude oil and look at it with COT data, okay, your red are your speculators. They're really long. Your hedgers are short. They're getting really short. And you take the difference in changes between them. So basically taking the net speculative change, subtracting the net hedger change, and if there's a lot of buying, you're taking a really positive number and subtracting a really negative number from the hedgers really selling, you get a really positive number, right? A positive minus a big negative is a big positive. Well, you can see in just this year, we've had some insane moves. Basically, speculators were buying like crazy back in May at a top. Hedgers were selling like crazy. Okay, back in November, hedgers were buying out of their shoes and speculators were selling. That was the low to the week. And just last week, speculators were going gaga over crude oil while, here we have hedgers just selling the crap out of it again. So I don't really know why we would expect anything different. So this is why I would give literally no room on a crude oil drop below 49.60, because if it gets below 49.60, you can bet that there's a lot of speculators that bought that probably are going to get wiped out. Okay. So that's how I'm looking at that. Here we are coming off a little bit here in the dollar yen. We can look at the square root levels, by the way, in DXY. We actually hit one. Holy crap, we just hit one. 103.59 was the +5 square root level, which on the way down, the -5 was where you actually got a bounce. Eileen asking, COT is out once a week. That's right. It comes out, it's actually released on Fridays, unless there's a holiday in the US that preceding, or unless there's a holiday in the US that's not released, and then it's released the next Monday. So it's released on Fridays, but it's only as of, so that means as of the data reported the prior Tuesday. So it's like 3 days delayed, but it's still useful. Okay. From a big picture standpoint, obviously. Okay, so here you can see dollar yen coming off. We've gone 1, so 1, 2, 3. If we fell from here, it'd be looking for 114.72 before you have good support. All right, so we've kind of gone through the gamut of, the crosses, and EuroCAD's one that I think is could be set up really well, but these yen crosses could be very interesting as well. And by the way, with this whole dollar move, you know what you're still getting right here? Here's the 30-year bond. The 30-year bond, actually I have the better on a chart over here. The 30-year bond is actually not, it's almost about to, it just turned flat on the day. It's almost positive on the day. Here's a 30-year bond. Okay, we've actually come back to where we opened the year, and this is a little misleading because the contract has rollover and stuff, a little different, but we are making another key reversal as we did yesterday. So the reaction in the bonds, which is what you want to look at on, with Fed, is really, really, really muted compared to FX. FX is obviously the biggest one as far as a response. So you're seeing bonds really muted. With this, it tells me that it really is probably time to go, start going the other way. With this dollar move. Tactically, Friday highs do tend to be where you get the market to peter out or exhaust. Exhaust is the best way to say it. Here's the weekly chart of the bonds. Eileen says Aussie looks like it might be turning, so I'm assuming you're saying it's getting a bounce. Yeah, so again, let's look at this chart. Let's put it in context here. This is a flag pattern, okay? I think you get a bounce, okay? That bounce, watch 73.80. Look, the bearish flag pattern is valid as long as you're under 75.24. So, you don't want to put a stop above here because if you got up here, you'd actually want to sell more. Let's go to an hourly chart, see what this looks like. Well, this is a 3. So this is a 3. So you could end up getting, this could be something like a ABC, get a retracement in 3 and then look lower in 3 again. Let's see here. 74.30 to 74.52. 74.52 is a square root level. So that might be your best spot to wait for a short is 74.52. Okay. Alrighty then. Are there any other questions or pairs that folks want to look at? I know one that's been kind of interesting lately. Matthew, do you see momentum carrying next week with low liquidity or more consolidated? Well, so I think the things change a little bit, right? So like you're not going to see the dollar move. The dollar's not going to move. You can't sustain a move like it's just not going to move like this. Okay, there'll be some currencies that work against, that will work. For example, the euro trade, or trade idea, because never triggered, but the euro trade idea is the same and looking towards 102.50, and would be looking to sell a bounce. Aussie, same thing because the flag pattern. Kiwi, same thing because the head and shoulders pattern. But dollar yen, which is way ahead of itself and I think at risk of rolling over, that is one where I wouldn't think momentum actually carries over. I think with dollar yen, you have risk of momentum petering out. And don't forget, there is actually, it's kind of made the headlines a little bit, but you do see there is that whole electoral college vote on Monday. Remember, the way the United States presidential elections work, you don't have, it's something to be aware about from a risk standpoint, okay? Because this would certainly be a huge surprise, but that's what markets, get really messed up on is surprises. So if you ended up with the electoral college actually trying to undermine Trump, because he's going to be president either way, it doesn't matter. Okay, because even if they get enough votes to flip, it goes to the House, and the House is Republican, and they'll still vote for him as president. But it would just cause shockwaves through the market because this whole market move is predicated on, Trump being able to push through fiscal stimulus and everything else, and basically, importing massive inflation, which means the rate hikes are going to have to go up like, 3 or 4 times next year. Okay, that's the whole perception of this, and that's all markets move on is perception. But watch pound Aussie as well. You do have a 5 up here in pound Aussie. 5 waves up. Ultimately, this could be one where you actually get a dump down into, 63 and change and then go higher. So I would watch this one, even if you're not trading it, but I would watch it as a, maybe a barometer of pound and Aussie levels, either one of them, right? Okay, let's check out. Canwall, he says the range for crude. Okay, so you're wanting a little more details on the crude range I'm seeing. Okay, so if we look at well, the resistance is the highs right here, okay, 51.64. All right. Support is 46.15. All right. You close back above 51. Let's call it this high. What's that high? Say you close back above 51, 65, which is this trend line, then you have to be bullish against whatever the day's low is here to go higher. Okay. We'll see how the week ends too, because you are getting, if you end the week like this with a weekly reversal, it's nasty. So a lot, Canwall, depends on how the market closes tomorrow, in my opinion. If you get a weekly reversal down here, crude is at risk of another spill lower. And again, that COT stuff, it comes into play here. All right. Okay, so, Peter asking, gold's at 1129 right now. Need advice to go. Yeah, hold on. So what I would do is wait until tomorrow, because one, trading in the middle of the day, especially after Europe and before Asia, is usually not the best thing in the world. But if you get a low down here on Friday, that's one thing. Always look for Friday highs and Friday lows. Okay, that's oftentimes you'll get the market making its final exhaustion move on a Friday. Okay, so get down here, one more low, pop up, close above it, and then that would be your long signal for me. Okay, this is support. There's no doubt about that. In fact, the market's already rallied $6, $7 off it. Okay, so that's it. Again, wrap it up here, and alrighty then, Eileen. So good luck, folks, and we will be looking like we'll be selling pound into 125, potentially looking at a short dollar yen position at some point. I don't know if it's from here or before 19 or from here or near 119. We'll have to see how the rest of this day plays out. But good action on dollar CAD here, though. Nice, coming off pretty good. All right, okay. Have a great rest of your week, folks. I'm going to get this up and archived ASAP. All right, take care, bye.